All right. Hello, everyone. Welcome to another episode of the Wall Street Rundown. I'm your co host, Billy. I have Wale with me. What's up from South Africa, bro?
Not much, man. Just watching the market bleed from afar.
It sure has been an interesting day, man. Interesting week, I will say, after that Liberation Day. And we talked a little bit about that too, like how that's going to affect the market. And
hmm
boy, did it deliver. It did not disappoint at all. So today's April 4th, 2025. The stock market, unless again, if you're living under a rock or somewhere, man, it's been bleeding this whole week. Stock market is down like crazy due to the trade tension between United States and China and many other countries. The S&P fell about 6%. The Dow Jones was down 5.5%. I mean, we're not that far from what is this thing called when they halt the market?
Circuit
The
breaker.
breakers, the breakers. Yeah, we weren't that far from the breakers for the first breakers. The Nasdaq was also down 5.8%. Like that is, dude, this is just nuts, man. And then China turned around today and put a 34% retaliation tariff on the US, and that drove the market even farther down. So, man, let me get
So
your
I
input, man, and see what do you
so
think
then
about what's going on?
so I got QQQ was down 6.21%.
Dang.
IWM was down 4.46%. SPY was down 5.85%, and the RSP was down 5.61%. So all I'll say is we may not be done.
We ain't done yet.
We may not be done. The level that we were talking about that we might test was that August low from
Crushed it.
last year,
Crushed it.
and we got there. I think you've been spot on with that analysis.
Mm-hmm.
All the levels we talked about last week that we breached,
Gone.
gone, completely gone.
Yep.
And again, when I was looking at the list of stocks that were getting slammed today, whether you're affected by tariffs or no tariffs, you got smacked today.
You got smacked. Yep.
Like nobody was safe. So, I think I said this in a post that I made yesterday. I said tariffs is it's just a piece of the story.
Right.
Now we have to see how that's going to affect the data that the Fed is looking at. And if you look at what Jerome said today, Jerome said, yeah, this is going to make our job harder. And
How did you think about his tone? I feel like he was more straightforward this time. He wasn't
oh
like
yeah,
beating around the
he
bushes.
wasn't he wasn't dancing around the bushes. He
No.
was very straightforward.
Yep.
And again, I will say this. We're not there yet, but God forbid we have to raise rates because of
Mm-hmm.
inflation.
Mm-hmm.
I'm telling you, the market will have another catastrophic drop. And
Right.
if you look at what I was talking about, I think it was either this week or last week, I said Trump wants to force the Fed's hand.
Yep. Yep.
Based on that, let me just read you what this man tweeted. This is straight from Donald Trump. This would be a perfect time for Fed Chairman Jerome Powell to cut interest rates. He's always late, but could now change his image and quickly. Energy prices are down, interest rates are down, inflation is down, even eggs are down 69%, and jobs are up.
Mm-hmm.
So that to me has been the ploy is I will create enough chaos in financial markets to force the Fed to start cutting rates
Yep.
because that's what saved the market in 2020 with COVID was when the Fed cut rates to zero.
Yep.
I don't know if that's what he wants again, if that he expects that to happen. I'm not saying that the Fed's going to do that because that was a global pandemic that no one really knew nothing about.
Wow. Yep.
But maybe his objective is okay, if you're not going to cut rates, and I think you need to cut rates, I'll create a situation where you're going to have to think about it.
Yep. 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 It's
So
funny because everybody's talking about tariffs. Everybody's talking about these different things. And again, I had a guy from one of my group, and he was like, "Hey, I think it's a good thing that we're getting tariffs and all that stuff." I was like, "All tariffs are not created equal, though." So like, we I don't know what the percentage is, but I'll say we're probably like 90% rely on imports from other countries. We
Mhm.
import a lot of stuff. We are the biggest consumers of the world, especially United States. So if you're the biggest consumer and you're importing a lot of stuff, how much more are people importing from you? You know what I mean? We talked a little bit about that. It's like you put a tariff on the Philippines, even if the Philippines have 56% tariff on us. But what exactly are they importing from us? You know what I mean? Like just it's the equation doesn't make sense in the terms of um if it was like 50-50, right? Like we 50% exporting to them, they 50% exporting to us, then that would be different. But we are the biggest consumers, and this is affecting a lot of people, man, a lot of businesses, I would say. So I don't know how that's gonna long term what the effect is gonna look like if this actually stays.
And another thing is that you have to also think about the environment that you're doing this in. You're doing it in a time frame where you're trying to get inflation down.
Hmm?
Like it doesn't help your cause by doing that. Like it's how people say like read the room, read the room. Like
Yeah, my man ain't
this
reading the room.
this is not the type of environment where you need to be slapping this type of tariffs on imports. China came back and said, "All right, fine, we're gonna slap y'all with 34% on whatever y'all y'all send to us." So, and we don't know how long this can last. Like so far, we've got 2 days in the books.
Right.
We haven't seen any country come to the negotiation table just yet. We'll have to see what happens over the weekend.
Yeah, I think
But
Colombia. I think I don't know if it's Colombia or somebody came down and like they would drop their tariffs on the U.S. from like 30 something to like 5% or something. I got to figure out who said that,
oh, okay. Well,
but
maybe
somebody
somebody
did
already.
come.
Okay. Well, maybe somebody else came to the table. But
Yep.
right now, like I said, it's not a good environment for the Fed. And the thing is, we don't have a Fed meeting in April. So, I mean, I don't know what's going to happen between now and May when they have their meetings. The 10-year yield I looked at today dipped below 4%.
Hmm.
And I think we were down. We were below 4% at one point last year before we started moving higher. But I have been saying this. This is the perfect storm for stagflation. And I think that is exactly what we're going to get. How long it lasts, how bad it gets, I do not know. But do your research, go look up what stagflation is. It's basically when growth slows down and is decreasing and inflation is persistent or increasing. It's not a good environment for stocks. It is not a very good environment for stocks. I think that's what we're going to get. And until we get out of that, again, to me, I don't know. I'd either tariffs get negotiated and everybody kind of just does what Trump wants, or the Fed is going to have to intervene. Those are the only two scenarios to where we may see a bounce because, man, getting like hitting those August lows, that was a very critical level that, if
And we lost
we
it. Yeah.
continue to dip below that,
Yep.
it's not a good look. So
Yeah. Because I have, I mean, whoa, if we lose this level, like the 500 level, I have spike going to like 489, 494, 495 around that area. You know what I mean? It's like
it's
that's
possible.
that's a crazy territory, man. And I mean, if you look at the 3 months chart, we broke through all the levels. We broke to the levels on what is this? August. We broke to October level. We broke to July level. We broke to I mean, if you look at the 3 months chart, we probably coming for that April low from 2020, was it 2024?
Hmm.
And that puts us at like 494, 495, somewhere around there.
Yep.
Like,
Yeah. I'm looking.
that's a
I'm looking
crazy
at.
drop.
Yeah, I'm looking at the levels right now, and yeah, I'm in the same area. I got 50 anywhere between 504.91 to 491.60 ish.
Yep.
That area will be the next area I'll be looking at to see what happens, and I am not very confident that anything good is going to happen when we get to that level. I mean,
Right.
we're sitting at a 45 VIX now.
Yeah, yeah. VIX has been up there.
A 45 VIX. Hey, you know what's crazy?
Mm.
I didn't sell out of my. Remember that time we were talking about those 60 and 70 VIX
Yeah,
calls?
yeah.
I didn't. I held a few.
You. Oh wow! Look at you.
I held a few, and those calls. So I
Those
have a
printed.
60 VIX. I have a May 60 VIX call. I got a May 65 VIX call, and I got a May 70 VIX call.
Wow,
All are well above 150%. I
that's
sold some
crazy,
today, but
man.
I still have at least one or two contracts of each.
That's crazy.
I put on my put spread this week on QQQ and IWM, printed
Those all printed.
Roku 500% trade, and Aklo was another one that I hit over 100%. Now, I will say this. Last year, the year before that, a lot of people were complaining about stocks that they wanted to get into and
There you go.
talking about I missed out on this and blah blah blah. Well,
There you go.
newsflash, Nvidia's under $100.
Mm-hmm.
Aklo is under 20.
Mm-hmm.
There are some really good names that are in that are on sale.
Yep.
And again, going back to what we've been discussing all week, we're not saying don't buy stocks, but we keep saying be prepared to potentially have to buy
Be
more if it
prepared.
keeps dropping.
Yep.
And we have seen it continue to drop. So again, now that volatility, we got a 45 VIX now, you know, breaking up your capital into smaller pieces is going to be better than trying to say, oh, I think we've seen the bottom now. I think we've seen
Yep.
the bottom now.
Yep.
Because we haven't seen this type of losses since like COVID. I think they said $6 trillion in market
Yep.
cap
Yep.
gone in
This
two
is yeah.
days.
Yep. Yep. And we don't know what's gonna happen over the weekend. The other thing that's very disturbing about this is you just never know what the administration is gonna say, gonna do. Like that's the most
That's the scary
craziest
part.
piece about this. Yeah, it's like
That's
you
the
might
scary
wake
part.
up tomorrow and he's like, all right, cool. We China came to the table, so and so came to the table, and instead of 34%, we're gonna do 5%. You know what I mean? And the market might rally from there. So he's just like, you just never know.
I mean, look at what happened to us on Wednesday when they
Mm-hmm.
just pushed it to after market close.
Yep.
The market rallied. So people like
Yep.
me who was expecting the market to drop, I'm sitting there second guessing myself and sweating like, should I average down? Should I stick to my
Mm-hmm.
guns?
Mm-hmm.
So even something that small of a change can affect what happens in the market. I will
Yep.
also say this. I will also say this. If you are an inexperienced trader, right, and you still would like to trade in this market, strangles and straddles are not a bad
It's not
way
a
to
bad way.
trade the market. Forget trying to figure out what side it's going. Play both sides. Once the one side that the market moves in is green, you hold that position and you get out of the other position.
Yep.
And that's another good way without having to try to pick out which way is the market going. I don't know. So if you're
Yep.
swinging something, maybe you start swinging a straddle or strangle, and then once the market opens the next day and you know what direction is things are headed, then you add to the position in that direction. That's
Yep. Shout out
another
to
way
my
you can.
boy Ronnie. Ronnie actually did that on Wednesday,
Okay, okay.
and he hit 800% on the green position. Like he's like, bro, I don't know which way this market is going, but I'm
But
getting like,
I know exactly.
yep,
So, but when volatility is high, strangles and straddles are an underrated approach that a lot of people don't use
right,
because it's kind of like, okay, you're going to make more money if you're right, if you pick the right side. But if you want to increase the odds of success, don't pick a side. Play both.
mm-hmm.
So that's another approach you can take. And with the 45 VIX, I'm not gonna lie, I would not be surprised if we get to 60.
Man, this
I
is
would
just
I
nuts,
would
man.
I would not be surprised if we get to 60. I mean, the VIX moved 50% today.
Yeah, in one day, like
In
that's.
in
I
one
haven't seen
day.
that since we hit that. When did we hit that high? Was that back in August? We hit that high of, I think it was back in August of last year. And I think that's what we're going for. Yeah, August of last year, we
Yeah, I
hit that
think
high of 65.
65. Yeah.
And that's what we're going, that's what we're going for right now. Because we broke
Yeah.
through all the levels on the VIX today.
And the thing that is crazy is that 65 hit that we hit on the VIX, that was a long wick.
Yeah,
This 45 one, the wick on the bottom is the long part. The top part, it's got a
it's a
lot of meat on it.
it's a solid
It's a
it's a
solid candle.
it's a solid candle. Ain't no wig, nothing. And if you look at that, look at the weekly candle, look at the daily candle. It's just a solid candle.
It's
There's
a
no,
solid candle.
even in the monthly. God damn, this is nuts, man. Yeah, so I won't be surprised if we hit that 65 sometime soon. Yeah, I won't be surprised at that at all. Whoever was buying those 65 calls, they know what they were doing. I wonder if it was Warren Buffett, but we're gonna leave that alone.
Warren Buffett is looking like a genius.
Man, the man is a king. I ain't gonna
Looking
lie,
like
he is a king.
looking like a genius.
And I'm glad you sent me that article that he still hasn't bought anything.
The cash
So
pile is growing. It's
yeah,
not decreasing. It's growing.
no. So he hasn't bought
So
anything yet. So that's crazy.
so if this so this is what I'm saying to you. Now I'm not saying that Buffett is always right, but if one of the greatest investors that we've ever seen is not deploying cash into the market, that means he doesn't know when the bottom is either.
No,
He doesn't know when the bottom is either.
no.
So it's just one of those things where, again, patience and prudence are what are going to allow you to survive.
Yep.
I've been saying it over the last couple of weeks. Continue to hedge your long-term portfolio just to be safe,
Hmm,
just to be safe.
hmm.
Because if you're able to make money with some of those puts that you're if you have, let's just say you've got like leaps or you got stocks and you're buying puts, the money you're making on those puts, you can use that to reinvest into your long position, or you can just
Yep.
hold them in cash. It's up to
Facts.
you.
Facts.
Um, but like I said, I do not think that we have seen the bottom. And I'll say that until we start to see the higher time frames change market structure, so you start seeing higher highs and
Yep.
higher lows for more than just 1 or 2 weeks, maybe like, you know, 2 or 3 weeks or 3 or 4 weeks, then you'll start to know that things are starting to shift.
Yep.
And then at that point, you'll start to say, okay, how long will this continue to hold?
Facts.
But right now, all the momentum has just been pretty much diverted to the downside. And
Yep.
even though we did have that one, no, 3 days this week where the market was looking like it was going to be bullish, everything just reverted right back
Yep. Yep.
to the higher time frame. And I think you've been talking about the candle on the yearly chart. Nasty,
Nasty.
nasty. And I think you said the same thing with the quarterly.
Mm-hmm.
Nasty.
Nothing.
So
Nothing looked good at all. But
yeah, it's
we live in a
just
time in the market. If you really know how to trade, you make money on the way down. Like,
yes.
we tell you guys all these levels. We explain to you why we think things are gonna be this way. But
Hmm.
there's a way for you to make money on the way down, right? And if you don't know how to do that, join the group and learn
And I
how to
will
make money when the market is dropping.
exactly. And I will, like I said, I will say this. You just look at some of these names that are on sale now. You got Intel back under 20.
Yep.
Got an 11% drop in Intel today. Oh my
Which is
gosh.
crazy because Intel has been getting some amazing news, like
News.
really good news. But you see
And
that
it
that
is
doesn't matter right now
doesn't
because
matter. Doesn't
yeah.
matter. Everybody's
So
catching strays.
yep, yep. So the S&P Global Forecast Review said that their comprehensive review of all its microeconomic forecasts following the unexpected imposition of broad trade tariffs, the agency anticipated higher U.S. inflation, revising its year-end projection up to nearly 4%. and expects a reduction in US GDP growth by 0.3% to 0.4% points. So the probability of recession occurring now within the next 12 months has gone from 30% to 35%. In my opinion, that probability is low. It should be like around 50-60% that we are
I
going to be in
wanted
recession.
I want to say, if I'm not mistaken, JP Morgan came out with a higher number.
Yeah, that's what I was going to say. Like this number should
I,
be like almost 60% right now.
I think JP came out with 60, if I'm not mistaken. I think I saw a tweet. And again, definition of recession means two consecutive quarters of negative GDP. Is it negative GDP or decreasing GDP? One of those two. I think it's negative GDP. Um, it's possible that we could be headed that way because you have to look at what's happening in the GDP landscape. Government spending is part of GDP.
Yep.
Government seems to be spending less. Consumer spending seems to also be struggling. You're starting to see consumer debt increase.
Mm-hmm.
So all of these factors are starting to show their face and are starting to all culminate and come together. And based on those things, it's not possible to see negative GDP for the first quarter of 2025. So I'm
Yep.
telling you, I will be really interested to see what that first quarter reading is in April, on April 30th. But it's like I said, this is not an environment where you can just be throwing money blindly and just buying stocks randomly, you
Yep.
know.
Yep.
Now, again, if you're thinking past 2, 3 years, this could be fruitful for you.
Yep. Yep.
But I will also have to say that in order for things to get better in the next 2 or 3 years, the whole landscape has to
It
change.
has to change.
This tariff environment has to change.
Yep. The tone, the
Um,
tone, the tone
the
needs to change.
tone has to change.
Yep.
Inflation has to continue to subside. So if none of those things change,
Hmm.
I mean, who knows how long this could last?
Yeah. Yeah.
Because to me, it's not going to be one of those things where it's like, oh my God, stocks are so low that everything's cheap. You know, let's everything's just going to start moving higher. The macroeconomic environment has to change.
Yep.
And people will be like, well, how did the stock market bounce after during COVID, even though we were kind of still in COVID and all that stuff? It's because the Fed injected so much liquidity into the market.
Yep.
And the thing that will suck is this. If things get so bad that the Fed has to do that again, what kind of inflation do you think we're going to see in the next 2 or 3 years?
Mm-hmm.
Can you imagine if the Fed has to inject more liquidity into the market like they did COVID in this inflation? Like when they did it in 2020, we didn't have inflation.
Right.
Can you imagine what we'll see if they do it in this environment that we're in?
Yeah. Yeah.
Gas will go up to like $8.
Eggs will be like $100. And I don't think it's a joke either. A dozen egg will be $100.
I will start buying empty barrels of gasoline today and storing them in someone's basement
Seriously, man.
because
And that's
I mean, that would be, I'm telling you, the Fed cannot afford to do that because you know what they're going to have to do? Raise rates.
wait. Yep. Yep.
So they are walking a very, very fine line where it's kind of like we can't create more inflation, but at the same time, we can't just like we can't cut rates if inflation's not going down.
All right.
They're in a tough spot.
Yep.
And you know what could happen? You know what could happen? Let's just assume that this thing just drags out until Trump gets who he wants as the Fed chairman.
Yep. Yep. I mean, he said he's going to retire once he finishes term. So yeah, whoever's coming next is definitely going to be, yeah.
Yeah. So whoever's coming next to me is going to be a Trump puppet,
Oh
in
yeah.
my opinion.
Oh yeah. I mean, it's 50-50, right? Because I think that's what he did when he appointed Powell the first time. He thought Powell was going to succumb to his ways. But
Mm.
Powell didn't. I was like, nah, man, I'm independent of you. Like, I don't have to listen to you. You know what I mean? It's like I can't uh be involved in politics. My job is to monitor, the economy and stuff. So yeah. But I think it's interesting, man. And the other conversation I keep hearing people saying like, oh, maybe Trump is trying to crash the market so that way we can refinance our debt and all this stuff. I was like, guys, you guys know today the US, if they really want to pay their debt, if we really want to pay that debt, we can just print the money and just pay it.
That's true.
You understand what I'm saying? So this is not about paying back debt. This is about um trying to like bring down the economy in a way where, kind of like you said, the Federal Reserve to be able to lower down the interest rate or cut it completely. And then from there, hopefully drive the market back up and be able to celebrate. I think at the end of the day of all of this, a lot of these are all ego driven, honestly, in my opinion. And that's why I keep calling that thing is organized chaos. Like,
Hmm.
people think like it's like this guy's just randomly doing this. And I'm like, this is not random. This is very organized, very methodic. And because we're so used to how this administration behave, we think it's chaos, but it's not. It's like literally, guys, like there is a plan for it. Like for us to be able to see where S&P was going before it hit there. And they're like, it's going here. And it went there. It's because like you can kind of tell like what's the bigger goal is. You know what I mean? So it's gonna be interesting. And now speaking of the Federal Reserve, like I see some layoff coming out today too. Like the public health sector, like for the DHS, the Department of Health and Human Services, they laid off like 10,000 people.
Whoa,
FDA also is starting laying like some mass amount of. There's no numbers for it yet, but they're gonna start laying off some people.
whoa,
Chrysler, which is now known as Stellantis, also laid off about 900 people. That's in the automotive industry. And the tech sector in total, they laid over 88,000 people as of March. You know what I mean? So the Fed is being hit from all direction. And when those data start coming up, what's that gonna do to the market?
dang.
Yeah, it is not pretty. So and I would say any move to the upside, I would not be trusting it in the next couple of
Nope.
weeks.
Mm-mm, mm-mm.
So I would not be
Again,
trusting.
I keep saying this. In order for stocks to make a turnaround that you can actually trust, not only just from a technical analysis of making higher highs and higher lows, the environment that we're in has to change.
Mm-hmm.
It has to change.
Yep.
Stocks will not push higher if none of this madness and mess that we're in changes. It
Mm-hmm.
won't. So,
Yep. Yep.
man,
Yeah.
whew.
There's more layoff coming. So we definitely gonna see that. Now, speaking of next week, I know we got CPI coming up on Tuesday, April 8th. And then we have the
Mm,
FOMC minutes only coming up on Wednesday. And then we have the PPI for March coming up on Thursday. So we have some numbers that's coming up for the month of March that might show us some, you know. So I don't know what numbers we're gonna see. I don't know. It might be realistic, it might be unrealistic. I don't know, but I'm keeping an eye on CPI for the month of March to see how that looks like.
didn't I don't know if it was you. It might have been you. Didn't somebody send a post not too long ago where somebody bought an 85 put on Nvidia that expired in like
Yep.
January? They might be in business.
Yeah. Yeah.
They might be in business.
Yep. Yep. We had IWM like puts for like 190, 188, something like that. And that was all bought within like the beginning of the month or like early like late last month. So
Oh yeah, we
somebody was
had
seeing
one
something.
eight. Yeah, we had 181 on IWM. And I will
Mm-hmm.
I will say this, shameless plug. I told y'all what was gonna happen to IWM
You
last
did.
Friday. I posted on my story. I said the PCE data says that the Fed is not gonna cut rates anytime soon. That's not a good look for small caps.
Yep.
Do what you wish with that information.
Yep. Yep. And boy, oh boy, like those
They,
position went like 1,000%. Like if you, yeah, if you got like a weekly,
oh yeah. If you bought a
great.
weekly or something like a short-term contract, because I'm looking at my IWM put, and this is a put spread. My put spread on IWM is up 97% this week.
Mhm.
And that's a
Yep.
very fairly conservative position because my expiration is June
If that was like this month or even this week expiration, yeah,
or 1 month earlier, that would have
yeah,
been a,
oh
a,
yeah,
a really, really, really bigger trade.
yep,
So I did trim some of my position today, though. I trimmed some. So QQQ and IWM.
oh yeah,
Um,
oh yeah,
but yeah, I will also say this. If you're the one thing that I enjoy about our trading group is that when we're trading stocks, not only are we looking at the technical data or the technical analysis of how to trade, we also look at bigger picture.
hmm,
Like I'm really going to give you, a really clear understanding of what is happening in the entire environment so that you can really make good decisions.
yep,
And again, you don't necessarily have to be a quote unquote trader because again, as an investor, this is still a time where you need to be attentive to what is happening in the markets.
yep,
These are times where you may want to start buying names. Again, not all at once, not going all in, but strategically chopping up your capital into small pieces and deploying that into the market strategically.
yep,
Um, you know, because I mean, a sub 100 Nvidia
and probably more
and
downside, probably more
there's probably
downside.
still more downside. There's probably
Mhm.
still more downside. But a sub 100 Nvidia, I would be a buyer of Nvidia under $100. I'm not expecting it to pay off for me right away, but I'd be a buyer. So
Yep,
think about it from a fundamental standpoint. Everybody was talking about, I mean, you found buyers of Nvidia um back when the stock was trading at like 120,
mm,
121,
people buying it.
150.
Yep,
So right now, right, the market is broken from a global economic standpoint. But then you also have to look at things and say, okay, are there stocks whose businesses aren't necessarily broken in this environment?
right.
Like, are there businesses that aren't broken in this environment? And the answer is yes. That's why I keep talking about software. You know, software is catching, they're getting backhanded because of the
Of
entire
the entire market, yeah,
market. But from a fundamental standpoint, when you look at their business, right, tariffs don't affect their business. Now, I will say this, if their customers start spending less
less
money
money.
because
Yep,
of the economic environment, that's a completely different story that could affect their business. But
yep,
to me, it doesn't necessarily mean that their business is broken. It could just be a rough patch, right?
right, right,
Let's say customers say we got to cut down spending for now, right? I don't think they're going to be losing customers, but let's just say customers saying, "Hey, we got to temporarily cut down spending for the next 1 or 2 quarters." At
right.
some point, when things turn around, those things are going to come back. So, soft right now to me, software names, cybersecurity,
Hmm.
any any company that does not ship physical goods, right? Because if you look at it, even companies that produce in America, as they're shipping goods to other countries like China's slapping them with tariffs now.
Yep.
So what I would be looking at right now, I would say which companies do not ship physical goods across international borders.
Hmm.
Those
Hmm.
to me have the strongest potential that when all of this nasty, you know, back and forth with the tariff starts to subside, that would be a place that I would definitely look as
Yep.
opportunities. So I
And
that I'm still very high on those names.
unless Trump start putting um let's
A
start putting
digital a digital
tariffs,
a digital tariff.
digital tariff. Yo, we laughing about this, but It could very well be true.
Amen. Amen.
it
Anything is possible at this point.
could
Anything
be
is
very well
possible.
true. Like, hey, the digital companies, we gotta hit you a little bit too, you know. So you never know,
Yeah.
man. So, but yeah, any advice going to next week, man? I know, yeah, the market just. I don't trust any upward move right now. I mean, we
Mhm.
broke through some very, very, very important levels. Um, so I don't know how far we go from here. I mean, there's some levels still to the downside we can look at, but overall, we have broken through some very, very, very big level, and then we are officially in correction territory on
Oh
all
yeah.
indexes. So yeah,
And I will say this as well. Um, will the market have days where the market could potentially be green and move to the upside?
absolutely. Yep.
Absolutely. If you're a day trader and you want to chase that move, nothing wrong with that.
Mm-hmm.
But as we have been talking, chances are at some point this market will revert back to the bigger trend.
Yep.
Because again, you can have the smaller trends happening within the bigger trend because that's what we got Monday,
Mm-hmm.
Wednesday, and
Mm-hmm.
Thursday. I mean, Monday, Tuesday, Wednesday, and then
Yep.
Thursday and Friday, everything just reverted right back aggressively back to the bigger trend. So
Yep.
those things are probably still going to happen. My approach in this market right now is to find opportunity where the market moves higher and look for opportunities to short.
Yep.
That's how I'm doing it.
Yep.
I am not because I'm not naturally a day trader, that's not really the strategy that I like to employ. I'm more of a swing trader. I'm looking for opportunities to say, okay, here's an upside move that I'm eventually looking for to die out at some
Yep.
level. And once it dies out, I'm going to look for
You
puts.
gotta short it. Yep.
So that's what I would be looking for in this market because yeah, the bigger trend is still very, very bearish. I actually want to point something out though. Um, There's a page that I have been following for quite some time on Twitter, and this page called this catastrophic drop months ago. They've been talking about it for months because they trade based on Elliott waves. I don't understand
Mm,
Elliott waves. I've heard of them. I see people who trade them, but I am not very well versed in Elliott waves. But the Twitter page is Trigger Trades. And if you just go look at his history, about his prediction of the bear market and his analysis was based on Elliott waves. I mean, everyone was laughing at him when he was talking about it. And because I've been seeing this for months. I've been seeing
ooh,
it for
yeah,
months.
I see it.
And people have been laughing about it, have been laughing at him. And he was spot on. If
Sheesh.
if you get in and what he's saying SPX is looking for a multi-year bear market. That's his prediction, a multi-year
Sheesh.
bear market. Now, I will say this. I'm not going to say that we do get a multi-year bear market, but his analysis of the Elliott wave and what was coming was pretty spot on.
Yep.
And he says we're now at an early stage of a catastrophic decline, and price is expected to break this 6 month range, escalating much lower.
Oh yeah.
So, what that tells me is that maybe the bigger picture or the bigger macroeconomic environment continues to worsen because I am convinced that we're going to get possibly get zero rate cuts this
Mm-hmm.
year. And I'm also convinced that we might even get a rate hike. Like
Ooh.
I'll put it, I'll say this. I will go out on a limb and say a rate hike is a 50-50 chance right now.
Yeah.
I'll say rate cut. So let me be more specific. We're not going to get a rate cut that is driven by inflation. If we get a rate cut, it will be based on something catastrophic happening, and the
Yep.
Fed has to intervene.
Yep.
And I think we got a 50% chance of actually getting a rate hike. I think so.
I mean, based on those moves and based on everything that's going economically wise, I wouldn't be surprised.
Because
I
I
would
think
not be
all of this is
surprised.
going to put pressure on inflation. I think we're going to start to
Yep.
see it tick up higher.
Yep. Yep.
And now that we've got these tariffs that are going in place, we're going to have to, when we get the April CPI, right? And we get the April PCE, we might start seeing signs, early signs,
Yep. Yep.
unless we get a resolution.
Yeah.
Because, like, again,
Unless something
unless
happen.
something
Yeah.
changes, yeah, unless
Yep.
something changes,
Which I don't see it.
I don't see it either. I don't see it either.
Yo. With that
So,
being said, man, I appreciate you still jumping on. I know you are out there in South Africa. I hope you're having fun. And I
oh yeah,
know
having fun.
you won't be around next Wednesday. So just
Yeah,
wanted to
next
give you guys a
Wednesday.
heads up.
Yeah, no live next week Wednesday. Friday potentially we'll be here Friday, but I think yeah, I should be available Friday. So
Okay.
yeah, look forward to giving you guys more guidance. And I will say this, I will continue to hammer. If you're looking for a group that will help you navigate this nasty market environment, and again, we're not just talking about trading stocks, we're talking about looking bigger picture as well.
Yep.
Join the group because I mean, so far, I mean, when were we talking about hedging back in like what was that January?
Yep.
We were talking about hedging your long portfolio back in January.
Yep.
We're in April. If you've been
Yep.
hedging your portfolio since then, you're in good shape.
You're in good shape. Yep. Yep.
So
Don't miss out. Don't miss out on those
do
huge
yourself,
analysis,
yeah,
man.
do yourself a favor. Join the group, man, because there's lots of good quality information that will help you change the trajectory of your financial future. If you, number one, are an active participant, you ask questions and you build your knowledge base. Because some people will join the group, will never say anything, won't ask any questions, and then they don't get any value from it.
Yep.
Be an active learner and participate. That's the only way you're going to become a better investor.
Yeah. And that's in
So,
everything in life, man.
and
You
that's in
gotta
everything in life.
yep.
Everything in life. Yeah,
Yep. Yep. All right, y'all. Well, you guys have a great weekend. While enjoy yourself, bro. And
I will.
we'll see you guys.